Apple posted two records this week. The stock price traded above $670 during yesterday's session. Also, the tech giant's market cap hit $623 billion, the most of any U.S. company, and making it worth 7 times more than McDonald's. Should investors be sweet or sour on Apple? Joining us now, trader Andrew Keen, president of KeenOnTheMarket.com, who's just about always keen on Apple, and Tim Bigham, a principal at Trading Block, who has a contrarian view and believes Apple is ready for a good fall. Good morning to both of you.
Good morning.
Morning, Angie.
Well, an analyst claims that Apple is on its way to becoming a $1 trillion baby. Tim, what do you think? Do you believe that?
Well, I mean, maybe eventually, but certainly not over the next several years, to say the least. Stock is up about 16.5% just since earnings, and remember, they were not a stellar earnings report. They did miss on both the top and bottom line. So whether it gets to $1 trillion or not, will take years, not months.
I agree with Tim at the time frame. I think it'll definitely get to $1 trillion. It's just a matter of time. It's got one move. It goes higher, higher, and higher throughout every year. The PE is still really, really cheap. We're not talking about a LinkedIn. We're not talking about a Facebook. We're looking at a 15 PE, $120 billion cash. They have a lot of products in the streamline, the iPhone 5, an iPad tablet, and even the Apple TV. So this stock, until they get some serious competition, is just going to continue to move one way. That's from the bottom left to the top right.
Tim, will the launch of this fall, the Apple iPhone 5 and potentially a smaller iPad, be the catalyst to lift the stock above $700?
I think Andrew's dead on with the fact that this is a high beta stock and also so widely held. It's the first one to be sold if the funds have to raise money. So if this market starts to fall, I think Apple will fall as well. And the hoopla built into the iPhone 5 certainly, I think, is almost fully reflected in the price of the stock. That move that we saw recently was really all on iPhone 5 and the iPad mini, not on earnings.
October 5th marks 1 year since the death of Apple founder Steve Jobs. How has the tech company fared under CEO Tim Cook, would you say, Tim?
Tim Cook is certainly at the helm and running it nicely as a business. They do great things with the cash by not just going out and spending it on anything but on growth. So I like Tim Cook in the place. He's no Steve Jobs, but no one will be.
I don't think he'll be able to be judged accurately till 3 to 5 years down the road once Steve Jobs' products are ready away. The iPhone 5, the Apple TV. Steve Jobs was huge about this Apple TV. So 3 to 5 years, he's doing things that Steve Jobs never wanted to do. Steve Jobs never really wanted to have a dividend. Tim Cook did this. They're talking about a stock split. Steve Jobs never would have done a stock split. Personally, I think if Apple splits 10 for 1 reverse split, gets it down to $65, you're going to have a lot of retail money flushing into that stock. That $65 stock could be $100, which would make Apple $1,000 within a year or two.
That'd have to be the final word. Thanks to both of you. That's Tim Bigham with Trading Block and Andrew Keen, president of KeenOnTheMarket.com. Thanks, guys.
Thank you.
You bet.